Hello everyone and welcome to Day Trader S&P 500. Today is November 28th, 2023. This is Dale Woodson, the editor of Woodson Wave Report. We're going to start with something a little bit different. I was busy over the holiday weekend, put out reports on Thanksgiving and over the weekend. I think this one went out on Sunday, the 26th. So without further ado, there's a lot of important information here, so we sent this to all of our subscribers, our NASDAQ futures, our annual, and our monthly, everybody, okay? Here's the alternate count we've had in the NASDAQ, okay, which calls a correction complete down here in October, and then a 1 up in blue, a 2 down, a 3 up, and an ABC for 4. This 4 has held above the wave 1 high so far. Unlike the S&P, which broke below it, which negated the alternate bullish count in blue, it's still alive in the NASDAQ, and the reason we brought that up was because the futures moved above that July 19th high, okay? So, and there's where 5 equals 1 up there, if that is a 4. That is the blue count, okay, alternate in the NASDAQ cash. The NASDAQ futures diverged, and it not only diverged from the NASDAQ, but diverged from everything. Okay, so important stuff here. I'm just going to read this. While the NQ futures surpassed their July highs, the NASDAQ, the S&P, and Dow remain below their August highs in the Dow as of this publication, and now 3 or 4 days later. It is perfectly normal for these indexes to diverge, especially in a bear market. It is also possible for the NASDAQ to move above its July highs to join the futures, while the S&P and Dow do not confirm the move and remain below and create divergence, okay? So, and I mentioned there that the weekly chart in S&P, the wave 4, what would have been wave 4 in the alternate blue count, went below the wave 1 high, negating the alternate bullish count in the S&P cash. So we have divergence, and there's a lot of people out there saying they all topped, you know, since this market's doing this, or this stock is, how can Tesla go up when the NASDAQ's going down? They're all unique, they're all different, they all have their own wave counts. And look through history in the previous bear markets, you can see the Dow topped in January, the NASDAQ topped, this is in 2002 bear market, you know, in March, and later in March the S&P topped, and then you can see they all went down. And they went down various degrees, you know, or percentages. The NASDAQ dropped, I think it was 78% or something like that. But you can see right there, that was the 2000 to the 2002 bear market. We skipped to the 2007 to 2009. Again, the Dow topped on October 7th with the S&P, but the NASDAQ topped later. They don't all top at the same time. They don't make their second wave highs at the same time. In fact, history shows that they diverge, okay, which is what we have. You can see the percentage and point declines there. Please note that the bull market ended in 2002, and the next one started a Fibonacci 5 years later in 2007, and the next one started in the Fibonacci 13 years later in 2022. We don't know when it's going to end. Okay, but again, we got the NASDAQ topping in November of 21, the S&P topped on January 4th of the next year, which is just 2 months later, and then the Dow topped 1 day after that. We don't know how far down they're going to go yet, but that's just showing that in 2 of the last 3, including this one, the markets have all never topped on the same date. So for the NASDAQ futures to diverge and make a new high while the other indexes don't confirm it is normal, especially in a bear market. And you can see, again, we showed this before, the 16-year bear market from 1966 to 1982. You can see a new high right there in the middle. You know, they call it what you want, a B wave or whatever. Did it mean there was a new bull market? No, it meant there's 9 more years of a bear market left, okay? And there was a slightly higher high and a slightly higher high. But again, it took 16 years, and this was a higher high. It didn't mean it's a new bull market. Well, if you thought it was back then, you were in for a rude awakening. Okay, so we wanted to get that out there for those who are out there thinking that since the the NASDAQ futures made a new high. It's a new bull market. It's not. Okay, let's get rid of this and get rid of that, and let's go to the US 10-year. Reason we want to go to the US 10-year because today, which is Tuesday, November 28th, the fourth wave made a slightly lower low. That looks like it's, let me look at it here, 4328, so we can fill that in there. Okay, 4.328. Okay, oh, we got a 9. There we go. All right, and again, the fourth wave, there was the 382 up here at 4.527. There was the 500 at 4.375, and the 618 still lies below there at 4.222. The wave 1 high should hold. That's at 4.094. So this fourth wave is between the 50% and the 618. So it's looking like it's almost complete, or it could be complete. This upside trigger here for, whoa, we messed that up. This upside trigger here, there we go, at 1 led us to this wave 5 high there, where it was target of 5.1 and the actual is 5.021. And by the way, since this 4 is a bit lower, let me get on that there. 328. Let's see if we can get on it. We're within 1/100th of a point. I usually zoom in to get it. Okay, that'll change that by 1/100th difference, but it won't be 5.21. It'll be 5.177, I believe it is. Let me change that there. 5.179 is off by 1 to the other side. Okay, it's within a 1/1000th of a point, but that's the new wave 5 target there with the new low. If it goes lower, obviously the wave 5, where it gains equality with 1, will go lower, but that's the minimum target for 5 is above the wave 3 high. Okay, ideally 5 equals 1, but it doesn't have to. But that's what we're looking at there. So we wanted to point that out. Okay, let's get into the S&P cash. Again, we're looking at, let me make that big there. An A wave down, a B wave up. We've got 5 waves down, leading diagonal for wave 1. Lasted a Fibonacci 13 weeks. Wave 2 will last a Fibonacci, is it 5? 1, 2, 3, 4, 5 this week, okay? So that'll be interesting, and so far that B wave high has held, unlike the NQ futures, which is the only index to top that high so far. So we'll see how that divergence goes, if the others join or not. Okay, let's go to the S&P daily. Most important thing here is to see the gaps. This one is still open, I believe. I think it came close to closing it today, the 45.38. That low today, excuse me, is 45.40. So it didn't close it. So there's 7 open gaps. These will all be retraced when this move down, when this third wave down happens. They won't all go at once or early, but they will go. When wave 3 down, there's 1 down in parentheses, 2 up in parentheses. When wave 3 down goes below the wave 1 low, which will be the minimum requirement. We can get that exact targets once this 2 we know is done, and we'll look at that for confirmation on the smaller degree of trend charts, 1 to 10 minute. Okay, let's get into the hourly. That's just the same thing. There's no need to get into that. Okay, let's look at the 10 minute. This is the S&P cash. That's the high so far, the November 22nd, and you can see this is definitely a fourth wave. Fourth waves are long and sideways by nature. We've got it's staying below the third wave high up here, and it's staying below the wave 1 high. I'll show you that on the ES, but might look for a lower wave E and then a move up to our 5th wave target, which we'll show you on the ES. Okay, let's get to the ES daily. There you go. Again, we got 5 waves down for 1 and leading diagonal. We had that upside trigger way back here at 41.85. That's virtual 400 point move from that upside trigger. The triggers and targets are working both upside and downside. We have a downside trigger here. We'll move it up once we know that this decline has begun in wave 3. But that high so far is 45.80.50. Okay, and we can look a little bit closer at that move. Let's go from the daily here we go. Here is what I'm looking at in the hourly, okay, and I think I got that in the report that I'll show you guys. Let me see if I can fit all of that in there. Okay, yeah, there we go. Okay, in red we've got a 1 up, 2 down, 3 up, a 4 down, and we've subdivided the fifth wave. We've got a 1 up, a 2 down, a 3. Within that 3, you could probably see a 1 up, 2 down, 3 up, 4 down, 5 up for the larger wave 3. Again, November 22nd high. Okay, we got a bunch of sideways stuff. That's a 4. If you wanted to see a definition of a fourth wave in a dictionary, you look it up, you'd see a picture of this. That's a 4. Okay, the wave 1 high is 45.39.50. When this moves below that, it's no longer a 4. Okay, and this wave 3 high here, I think, is the 45.80.50 high. Let me zoom in on that a little bit. Okay, so that 5 needs to move over. There we go. So this move up is 5 waves, so it's either 2 or A of 2. It's more likely A of 2, but we'll let it play out. But this 5 here in the red, there's 3 down, 3 up, 4 down. This 5 gains equality with 1 at 45.83. So what we're looking for is a move up above this wave 3 high after this long sideways fourth wave is done, and then they'll start taking it down. Okay, got to take out the shorts first. Got to take those stops that are sitting there above the wave 3 high, take them out, and then take it down so they can make most of the people lose most of their money most of the time. That's the goal of the stock market. You just gotta outsmart them. Okay, so this is the ES hourly. Let me get into the report that we put out this morning before the market opened. Okay, and here we have that high so far is still that's the same chart, still that 45.80, and the target where 5 equals 1 is 83. So it's within 2.5, but again, this looks like a 4. We're expecting a 5 and then a move down. There again is that upside trigger with the big move up, and there's that open gap in futures, which again they're open 23 hours a day. Gaps don't usually last very long, but this one's there. It will get retraced when this move down happens. Okay, so that's what we're looking at right there. Okay, that's it for this. I believe today's Tuesday, is it? Let me look at my calendar here real quick. Yeah, today is Tuesday, so that's it for Tuesday the 28th. Get you guys all caught up, and until next time, take care, everyone.